and then we'll go back to it. So what we're looking at here, the biggest key, in my opinion, for with the market right now is kind of this IWM chart. And IWM is in its longest consolidation that it's ever had in its life. So in its life, IWM tends to have these really long consolidations. So right here, you see a 200-day consolidation, you see a 280-day consolidation, and then here, this is a little longer one, but it's a little larger in structure. And so like this one's 15, actually from top to bottom. This one is 18% and roughly 700 days. So this is actually the longest consolidation. But we're getting a consolidation that's larger than most of the other consolidations that we've seen in the past on the IWM weekly chart. So we've had a, what is this? Come on now. There we go. We've had about a 700-day consolidation of roughly 25%. And so the thing that I've been watching for right now to get ready to get out of this consolidation here is this specific high here. We have this high was the strong high because it produced this new low here. Boom, we undercut, produced a new low. So now this is considered the strong high. So just like everything else that we talk about in a lot of this market structure, you want to see the strong high be broken and then immediate downturn and a retracement and the retracement into some sort of inefficiency. In our case right now, you're seeing multiple confluences with this inefficiency. You got a breaker, a fair value gap, and the 200 EMA, which granted this hasn't done much over the last 700 days. It doesn't really mean anything. But they're all kind of right here in the same spot. And my guess is if I were to put an anchored VWAP on somewhere right around here, yeah, it's right at that same spot. So I just put it on an anchor at this level. That's kind of where I know that was like the week before the move up. And so you can put it on any of these and it's the anchored VWAP is coming right to this exact same spot. So this week, last week was a key. So last week's low needs to be protected. That needs to now be a protected low to create a move. If we hold up where we are this week, excuse me, then this high right here, this 205, is now a weak high. So that would be our level to look for. And then above that would be this 212-ish level, which of course, obviously, as you can see, is this same level here. Very similar to Amazon, where you see all these kind of moves here. Those could have been arrows. It doesn't really matter what the hell they are. You got rejected, or you're holding, breakdown, rejection, and now we can come back up. So if we can come back up and get rejected from this 210, which we probably will the first time we test it. Let's be honest here. Most likely, especially if we go straight from 190 to 210, that's what, a 30% move, a 20% move, 10% move. We're most likely going to get rejected there. And then come back down, hopefully hold this strong high, create another higher low, and then continue to break out. My real target that I'm looking for in this is minimum this high right here. So let's clean this up a little bit. This high right here. So you got equal highs, 1, 2, 3 sets of equal highs, a fair value gap, and then also all these highs right here. So somewhere in this zone is my full target for the year for IWM. And even all-time highs, but I'm more conservative usually. So that's a huge key for me. Right now, a lot of IPOs and a lot of other things, they are still in accumulation phases. They are still in your stage 1 phases. IPOs are still in the IPO institutional due diligence phase, which is just a stage 1 accumulation on a new IPO. One thing I just got into today was a snowflake. I think this looks phenomenal. If we close here on a weekly chart, where our first target is this level here at 240, 240 for a nice round number, 240, 250. That's a solid level to look for. So we have this low here, which is also this high, this high, this high, this like 202 level, which was where we entered today. We entered on the breakout actually above 202. So if you go into a smaller time frame, the exact candle I entered on was this specific candle right here at 7:30 my time, 10:30 market time. This was exactly where I entered because we had a heavy break and then it retest of this. It came down into this fair value gap, and now we're looking to continue higher. If you look on a daily chart, this was actually where I wanted to get in, was this like 185 on this reversal here on this swing low. See, we had a low, lower low, higher low. That's a swing low here. This is kind of where I was looking to enter, but I ended up not being able to. And so, but we do have one thing that I absolutely love about this is the volume on these 2 days here, today and yesterday. So today, kind of the volume today, how high above your daily average volume that it is, kind of makes me think more that of an institutions are actually buying this. And so and it is in its institutional due diligence phase. And for those that don't know, an IPO has four phases: a IPO base, an IPO advanced phase, institutional due diligence phase, and then an institutional advanced phase. So just a quick wrap up of how that works. I've talked about this a lot over the last few weeks because a lot of stocks are in this IPO institutional due diligence phase and starting to break out of that consolidation. So we're watching that a lot. So this is your IPO base, your IPO advanced phase, failure, due diligence phase, this whole consolidation. And then as we break out above there, as we break this high right here, now we're starting to go into a stage 2 markup in a Stan Weinstein style of trader. So Stan Weinstein would call this a stage 2 markup. And as an IPO style, because this is an IPO, it's now becoming an IPO or an institutional advanced phase. So what happens in the institutional advanced phase is you tend to get the strongest moves of that stock. The strongest, the quickest, the fastest. My favorite example that I show when I use this is Twilio back in 2017. Notice it's already marked up. IPO advanced phase, as it becomes an IPO, it has its first move to the upside. IPO failure, where it undercuts all of its first move, most of it. I don't think it actually, yeah, it barely undercuts. See right here? Barely undercuts its full move from the IPO advanced phase, forms a very long consolidation. This one happened to be 2 years, very similar to Snowflake. And then as it gets above this high, very similar to what we are doing right now in Snowflake, as we're getting above this high, then you see it's moved to the upside. And so this is very similar to what I'm looking for in Snowflake. There's a lot of stuff that are starting their institutional due diligence phase. Path is another one, which I talked about this on Sunday. Path is same scenario. Here's your strong high right there. This is the high that created this lowest low. We have a break above that high, came to the volume weighted average price from the IPO day. That's this line right here. And then got rejected, of course, because that's its first time touching it. And then came back down, filled the inefficiency, and now looking to continue higher. So this is another one that I'm looking for a heavy move to the upside in. So I'm seeing a lot of these IPOs that are starting to form their institutional due diligence, that are getting out of their institutional due diligence phase. Notice here, if we move this anchored VWAP to anywhere around these lows, it bounced it, undercut just barely for a couple days, and then popped right back above. And so this is definitely another one that I'm thinking is going to have a heavy move to the upside. Somebody just asked me about Carvana, and I don't think this is what Carvana is doing because it's already made its move. So if you look, this is your IPO from Carvana. Carvana is old, so Carvana is an adult. Path, it's more of like a young adult. If you're thinking of like how old something is, your IPOs when they first start, when they're in this phase right here, they're babies, and then they have to mature, similar to us as humans, because humans are involved in this. And so like this one actually is considered, I call this a stair stepper. Is a very powerful pattern where it never actually undercut, it never formed an institutional due diligence phase. IPO base right here made its move to the upside, and then kind of just based out, continued higher, based out, continued higher, based out, continued higher, and then eventually undercut it. So now, in my opinion, this is just a stage one accumulation. That's what this whole area is a stage one accumulation. And then above, and then actually broke this strong high, which is what I really, really, really like. This is why I'm looking at Carvana so heavy. This strong high, this is the high that produced this low right here, the very lowest low of Carvana's life, I think. Let me just double check that. Yeah, the very lowest low of Carvana's life. It broke this high, was the high from there. So we broke that in December. Just barely. Just fucking barely, which is kind of what we want to look for, which is kind of what we're looking for. Broke that, and now if you notice on a, let's put this on a weekly chart, it's that inverse cup and handle style right here, or inverse head and shoulders, I mean. Shoulder, head, shoulder there. But then also, it's got a little cup and handle, cup and handle. And so this is a very, very strong pattern. And my thoughts are it's probably going to come up to the 75, 76 level. I'm looking at getting into it very, very soon. The reason why I actually didn't get into it today, I was looking at getting into it right at close, but it did not close its daily chart above its 21-day moving average. I think that's the 21, that's a 50. That's a 30. Here's my 21. Did not close a day above its 21-day moving average. That's kind of my line in the sand where if it's not doing that, I'm usually not getting in until it does close its 21-day above its 21-day moving average. We are on the contrary though, right above a 5-day moving average. So we'll see if we can have a good balance over the next few days. So Carvana is one I'm looking at. Path is another one I was looking at, which I talked about earlier. And then Roku is one that I am in as well. And Roku is not an IPO because it's old. It's older. IPOs for me are within pretty much like if they IPO'd in 2020, 2020, 2021, 2022. That's what I'm looking at within the last 4 years. Those are the IPOs that I'm looking at for IPOs specifically. Roku kind of is a little older, and it's had its IPO advanced phase, its institutional due diligence phase. Actually, it never had an institutional due diligence phase. Breakout, first move, IPO base, IPO advanced phase, and then it kind of just right here would be its institutional advanced phase. So it never really had a base to build until now. Yes, Netflix did have their earnings. And so what we're seeing on Roku, again, very similar to um, what I talked about on Sunday for our pop-in stream. We wanted this level to hold, this last week's low, because now this is creating a swing low. So we have, depends on how you want to look at these specific highs. This could be the high or this could be the high. It's kind of sloppy in my opinion. But we have this set of highs here, which is just an easy target for me. It's 26% away. It came down, tested it, came down very slowly. Look at the volume as it's coming down. the volume of this and this, these two candle bars, versus the volume on the way down. You have declining volume on the way down, coming into a nice order block here. And then also that happens to be the 21 EMA on the weekly chart, which is better than the daily chart. You're above your 30 week, you're above your 40 week. Those are my keys that I always have to be. If I'm looking to long something, it has to be above a 30 week, it has to be above a 40 week, and ideally it's above a 21 day. And that's just kind of, those are signs of stage two markups. I don't try to necessarily trade a lot of stage one accumulations. I try more to say trade markups where it's going to be having a good move to the upside. Like we're looking for a 26% move here. So we are kind of confirming our pivot here, very similar to kind of how I was talking with JPY over the last few weeks before it had its run. So we were very on it with JPY, and so we're looking to be just as on it with this. You're finally above your 21-day moving average. We entered here somewhere around one of these days. No, it was Monday. We entered Monday, got rejected from its 21-day, which was fine because it was so close to the 200. Your 200 days kind of was the key. Now we're above our 21-day, which just gives me extra confluence to hold this position. Our first bare minimum target for trims for me is 95. Bare minimum target for trims. It's because this is like in a short-term time frame, this is the high that created this low. So we're probably going to come up, take this high at 95, then come back down somewhere to 92, 90, form a right shoulder, form a little bit of consolidation, and then have its move to the upside. We do see it is gapping up after hours, just about $1.50 or so from Netflix. Netflix had phenomenal earnings. Year over year, quarter over quarter, they were kind of mediocre, which I'm going to go into next. And so Roku is one which I'm very, very heavy. Not heavy, but like just normal position, but I have heavy heavy confidence in this trade that we're at least going to come back to these highs. I mean, you look here, we broke this downtrend line. I'm guessing, I haven't actually tested it. If we go to volume weighted average price, we are right at the volume weighted average price from this specific high, which after hours, we are above this volume weighted average price. The volume weighted average price is at, the exact price is at $91.38. Right now, after hours, we're at $92.45. So we're actually breaking above that from after hours because of Netflix earnings. Next, I'm going to go into Netflix, which they just had earnings. If you are in this and your contracts are out of the money, so if they're 550 or higher, you might actually get fucking crushed. Unfortunately, if it doesn't have a heavy move tomorrow to continue this, you might get crushed. We'll see. It kind of depends on how they want to move these contracts. It's had we're at 33, so roughly a $40 move. Its expected move till Friday, so that is till Friday, so not necessarily just tomorrow, but its expected move for this earnings was $50. And so for those that don't know options very well, if you are out of the money with weekly options at during after earnings and it did not make your expected move, then most of the time you're going to get IV crushed. How much depends on the IV rank, it depends on how much the IV was, etc., etc. So there's no actual way of saying like, oh, it's going to get IV crushed X amount. But you have an idea that, okay, well, it may be IV crushed a little bit because it had a huge move, yet not necessarily still to its actual expected move. And look at this last time, we had a $55 move, and then the previous one, it was trash, I think. No, $40 that time. So Netflix is known to have huge moves. Their earnings were absolutely phenomenal. I wouldn't say absolutely. Their year over year earnings make it look better than it is. Boom. So you see right here, our year over year earnings are, and this will load the chart here in a sec. This year over year earnings, we beat by 1,658% year over year. But if you notice that for whatever reason, Q Q4 2022 only was 0.12 for your EPS, which I don't know why. I would have to look deeper into this, which is not something I really want to do nor care to do. Let me get this deep view to work. There we go. You would have been safer within the money calls, but they're way more expensive. But we do have, it was only a 1% surprise for sales. We didn't actually beat the estimated for EPS quarter over quarter. We are down about 48% on EPS. Let me see. I did the math on this on one of my calculators. Yeah, 43%. So quarter over quarter, we're actually down for EPS, which isn't very good, but it's had a good move to the upside. I don't know their guidance. I don't listen to any of the calls. I just simply go through the hard numbers. Your sales, you are increasing. So we have, this is what I'm looking for: 7.85, 8.16, 8.19, 8.54, 8.83. So as you see, every single quarter, you are increasing in earnings. And Netflix is kind of, it's so big. And like once you get into bigger stocks like this, you don't necessarily, they don't become high growth stocks, in my opinion. They're not high growth stocks anymore. Like I don't consider Apple a growth stock. I don't consider Amazon a growth stock because it kind of, they're so big and they're so well known. They need something new to reinvent themselves. Same with Netflix. Netflix is new was when they added their ad services. Okay, now if you don't want to pay as much, you can pay a little less and you're going to get ads. That was their new. They haven't had anything since then, but they're still seeing like newer people coming in because of that, I'm sure. But like Apple and Amazon, they have to find a lot more new. And so I don't look at a lot of like these bigger ones as high growth stocks. J&J is another really good example. You have declining earnings actually, 8.1, 4.3. So this is year over year. 8.1% year over year, 4.3% year over year. Now you're down 2.55% year over year. So it's actually getting less and less and worse every single quarter. And that's not what we're looking for. You have 25 billion, 21 billion, 21 billion. You're not growing as much. These heavy stocks, heavy companies, they don't, I try to get companies and I try to, the stocks that I look to trade and to invest in, I'm really looking for them to be growth stocks. And so Snowflake is a phenomenal example for one reason, another reason why I love this stock so much. So you see like 16% year over year growth, 1,400% year over year growth, 2,100 year over year growth, 127 year over year growth. And obviously, it's not going to be able to sustain that. But if it can sustain a year over year growth over 30%, that's what I'm looking for. Same with here, 35%, 35%, 47%, 53%. You're seeing this year over year growth. Yes, it actually is decelerating, but as a company becomes larger, it's naturally going to have it's going to be harder to actually keep those percentages up. And so that's a huge thing that I look for personally when I do get into a lot of stocks. I do look at fundamentals more than I feel like a lot of other people do. Path, another reason, another one, 466%, 550%, 140%. Like the fundamentals on these are phenomenal. So that's one, those are reasons why, and more reasons to give me extra confidence in these different stocks and different things that I look for. So I do look at fundamentals and earnings growth a lot more than a lot of other people do. Next, we have Tesla coming up for earnings. Actually, I'm going to keep it on deep view. So Tesla's earnings, we have Q3 was at 0.66. It was 37% miss quarter year over year. So we do see just a not very consistent growth. And that's why Tesla's not fucking doing anything. People just want to say, what's Tesla doing? Why isn't Tesla moving? Look at their earnings. Those are the biggest keys. Q4 2022, we're at 1.19 earnings per share. Q3 2023, 0.66%. That's a 50% drop almost roughly for almost year over year. It's down by one quarter, so it's 3 quarters growth. So it's like, why isn't Tesla doing anything? Because their fucking earnings aren't doing anything. Their earnings are decelerating. Their earnings are not, they're not consistent. You see here, in 2020 and in 2021, look at 0.8, 0.15, 0.25, 0.27, 0.31. Look how every single quarter it's going up. Your earnings and your sales up, 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 up. 90%, 200%, 200%, 150%, 300%. Every quarter they're going up. But as you're after 2022, look where it, wait, where did it go? I was a little farther out. Look where it topped out. 2022 starts going down 1.07, 0.76. You're less. You go from Q1 to Q2. You're down 2 billion now. Your sales are decent every single quarter. But look at these right here. You have 23 billion, 24 billion, 23, 24, 23, 24, 21. For 5 quarters, we have not gotten over 24,000. So ideally, my thought with Tesla is if if we are going to continue higher, we need to see some Cybertruck growth. If we want if we want Tesla to go higher for earnings, and I don't know exact date of when the Cybertruck was released. I'm not into it like that or anything. So, but if we see sales in of the Cybertruck, if we see Cybertruck sales in this specific earnings quarter, then and if it's and Elon's like, man, we sold way more Cybertrucks than we ever expected. The demand is huge. We're gonna run. It's gonna run. It's probably going to 230, 240, somewhere at least to this 200 EMA. That's this purple one. On any of my charts, doesn't matter whether I'm on deep view or trading view, purple is always my 200 EMA. So you're probably gonna come up to this 200. If Elon's like, man, I couldn't have expected this to go any better, you're probably going to go up to 200. If it's a little mediocre or kind of disappointing, you're probably going to come back to this 195. You're right in no man's land right now where you got equal lows here at this 206. So equal lows here at this 206 and then this low right here at 195. It's like right under 195, but I like round numbers, so to me it's 195. So if we do undercut that 206, we're probably coming to 195. Tomorrow, Tesla, during the day, intraday, it's probably not going to do anything. It's going to be just like these days that we're having right now, just a sideways bullshit chop. So don't even try to day trade it. I know a lot of people have been trying to get into Tesla and been trying to trade Tesla over and over and over and over and over. That's on them. For me, this looks decent, but it needs that catalyst. It needs that earnings catalyst. And I don't personally trade earnings. I will not trade earnings. I don't like to. It tends to clap you. It's a gamble. And so if you do hold, so like if we do hold this week, we have a slowing down, a doji, a doji. If we pivot this week to the upside, and then next week hold this week's low, that's going to form a swing low, and we'll look to come back to these levels higher up here and somewhere right around here. If we do not, and we continue down, then we'll have to double check to what we're going to do from here. In my opinion, Tesla's a market lagger right now. Where's my RS? Relative. Why does it have relative strength? Is it that bad? Yeah, usually it has a relative strength rating. Oh, it's so bad. It's at 18. God damn. Its 3 month relative strength is only 18 out of 100. That's not something I tend to look like. I look for I look for rising relative strength. And so that's what to look for Tesla for this week for their earnings too. Next I do want to go to I'm just gonna stay on deep view, fuck it. Next I do want to go on TLT. And I've been mentioning this for a few weeks now, probably since right around this level up top here, that I'm looking for it to come back down to this 92 level and hold. Depending on how you like to form your swing structure, and because this is such a choppy, shitty fucking chart, you could say this is a swing high, and that created this low. We took it, and now we're coming to an imbalance. Kind of depends on how you want to look at it, but we are still below a declining 200-day moving average. Ideally, what's going to happen, and just similar to every other stock that we've been following, just like Snowflake, you have this declining 200 EMA. It goes sideways for a long time, and when it goes sideways like that, look at the price just doesn't do anything. It doesn't respect it at all. And then you see your moving average start to rise and incline. That's when it's going to start making it's mattering, and that's when it's going to actually make a difference. Palantir is one where you see here it couldn't go up. Every pump below this 200-day moving average is sold off. Pump, sold off, pump, sold off, pump, sold off. Starts to flatten, finally gets above your 200 EMA, starts rising, and now you're coming right back up. And now we're starting to bounce off of this moving average. So with TLT, I don't think that in any time soon that it's coming up to these levels, but this is my level that I'm looking at for the year, is this 110. I do think that if it can hold 92, then we can come up to this 110 fairly soon. If we do not hold 92, we'll probably come to, let me find there it is. I don't use this a lot for actually charting. If we can't hold that 92 level, we'll probably come to this 80, 85, 88 level. And just break her right here. So TLT is gonna probably go sideways, and that's just with interest rates. We're gonna see a fluctuation. We're starting to see a uninvert between the 2 year and the 30 year, and that's really what we want to see. Going back to currencies and DXY. DXY, we are right at the 200 EMA, which rejection, rejection, rejection. We'll see if it rejects. I still like this like 104.50, 104.30 level. Are we gonna get it? I'm not 100% confident that we are if we start like rejecting here and pulling back. If we break underneath this 102, 102.90 level, then and really start rejecting off this 200 EMA, we'll probably come back to like 102.40 and 102.50, or even take out this low. On a weekly, yeah, on a weekly, if we close the week like here, it's very similar to these three candles. One, two, three, one, two. So like a heavy body, a smaller body, and then if we next week we maybe even see a smaller body similar to this, where that could be like a rejection for another move down. UJ still looks fine. With everything else and how bullish I am for the market, UJ looks perfectly fine in my opinion. On a trend sense, we're above a 50 MA, we're above the 10 MA, we're above the 21 MA. No reason to short it. None at all. You're above every single moving average. That is significant. So, and on a weekly chart, the only highs we have left is this 150, 170. There's no fair value gaps. There's no really anything. So on a weekly, that looks like the draw to me. You do have on a lower time frame, just kind of this fair value gap here, which I don't think it's going to be right above these highs, which we'll see most likely see a reaction at. I don't, and it's psychological 150. So we'll most likely see some sort of reaction at that, but I don't know exactly how much or what type, like if it's gonna have a heavy reaction, most likely it could come back to here. Notice how like this bar was an easy bar right there. So like if it reacts here, it could easily come back to 128. If it gets above these levels, it can easily come right to 150. These last three candles really look mids, but I do like just kind of the consolidation of this shorter term time frame here on like a 4 hour. 4 hour for right now being my short term time frame. A lot of people sometimes the 4 hour is a longer term. Right now it's my short term because I'm mainly using weeklies and dailies. And so like this wick right here, that was kind of a key where it undercut everything, continued higher, and now we're back above our moving averages, back above everything, and looking to continue higher in my opinion. Let's look at GBP. I know a lot of people were looking at this. My problem with GBP is you're right at the weekly 200. If it can have a heavy move above, we'll come back to here. But this one for right now, we have had, and this is why I don't trade this shit. Look at this. And the whole time we have been trading UJ. Look at this fucking consolidation. It has had a, well, it's 150 points, but a 1% move over 35 days, over a month. It has had a 1% range over a month. I don't trade that shit. I don't like ranges like that are so small that you just can't really do anything with them. Over the last month, USD JPY, we were in it right around here. We were looking for longs. I was saying, hey, we're gonna get ready to go long. We've had a 5% move, 700 points or 700 pips, 7 points in dollar value. So this is what I'm looking to trade. That's why I like it. I think it trades more like NASDAQ. The weekly candle on UJ just came down, came into the previous week's high right here almost, and we're looking to continue up. So that's what I got for today. Looking bullish for the rest of the year. I think dips are meant to be bought. We're 7 days away from 2021 or from January finishing, and and it looks like we are gonna get our positive January. January 1st would be the open of January 1st is right here. Cool. It actually opened low, which is what I like. I wanted a kind of a pullback in the beginning of January, so the end of January can be bullish, and that way we get a real like, okay, this is gonna continue for the rest of the year. And so not just like, oh, it's gonna continue for a little bit. Like I'm bullish for the year, not just a little bit. My real target for I think the Qs is gonna have about a 15 to 20% year. So my target for the Qs is between, I'm going to use a range. Let's just go 365, 465 to 480 really is kind of where I'm looking at for the rest of the year. I'm looking to come up to these levels, 480, 465. And that's gonna take all year. Now, I'm not looking at it just right now. I'm not looking at it just over the next course of a few weeks. I'm looking at this over the course of the next 11 months. I'm thinking we could come up to these levels. A lot of times in the past where we do have bear markets. So let's go, let's see. We'll go to, and if you have any questions, feel free to ask. Right here. 2009 was a year that we based out. And then 2008 was the year we dropped. 2009 based out. So I'm looking at 2010 as we were coming into all-time highs. Even then, I mean, you had a 28% move on the NASDAQ in 2010. And it was choppy. It was choppy as hell. Look at it. This was the open somewhere around these levels. This is the close right over here. So, but it was a 27% move. You go to 2004. That's the next level. Kind of the next one. 2004 was a little more choppy, and I don't honestly think. Was 2004 an election year? Hold on, I actually want to check that. Yes, 2004 was an election year. Thoughts on CVS? I'm glad you didn't ask for CVX. So many people have been asking me about CVX lately, and I think it looks trash. CVS looks terrible. Actually, just kidding. Just talking shit. It doesn't look bad. We have this high right here. This is very similar. This is what I look at for a lot. And of course, if you watch Playboy's streams, this is pretty much exactly what he does with a lot of his trades as well. We look for structure. We look for strong highs. This is our high. And you could say, I mean, because these kind of created like equal lows here. This could be a strong high or this. I like this level a lot better. We came up, took our high, came up to the 200 EMA on the weekly, which this I don't like. It's below the 200 on the weekly, which means this could be a ceiling for it, above at $81. We are right though. The good thing that I do like right here, there's a fair value gap and a breaker and your 21 EMA. So it's at a short term, this is at a level where it could easily bounce. If you were to, and it looks like it could be creating a swing low. So stops below this low right here, targeting here. And you only got a 10% updraw though. I Right now I'm looking for shit that's like got 20, 30, 40% of an uptrend possibility. Carvana, we're looking for 40%. Roku, we're looking for 26%. Snowflake, we're looking for 20 some percent. What am I looking for on Snow? 250 is my target. 20% roughly on Snowflake. And so I'm looking for much larger moves and risk to reward to opportunity. That's what I've been talking a lot about lately is like, yes, this looks fine. This looks just fine. I mean, if it pivots here, it could easily come back to 81, 82. It looks fine. But does it look great? Is it have a 40% or 30% or even a 20% upside possibility? A high probability of going that high? In my opinion, no. And so that's where I would rather trade something like Carvana, something like Affirm even. I think that looks fine. Path, that looks great. Roku, Snowflake, what the things that we've already been getting into, those are the things that I'm really looking for your for moves. And honestly, I don't know what's up with these gap downs. Why is it gapping down 4%, gap down 3%, gap down 4%? Now we're below our 200 EMA. You're below your 10 MA, you're below your 21 MA. My guess is you're below the 50. Nope, you're bouncing off the 50, which is your institutional moving average. That's right where you should bounce off. So I don't, it looks cool. It'll probably bounce, but is there a lot better things a lot more opportunity? Yes. I think there's a lot better opportunities out there. This is another one just as something else that I'm not actually in yet. If this pivots here, if this finishes this weekly candle a hell of a lot better than it's looking now and holds and it closes at the highs, this is next target, just as a short-term target, is 21% away. Your real target would be this high right here, and that's at 100% away. God, this looks good. And again, this is your just your basic IPOs, advanced phase or institutional advanced phase that I'm looking for. Look now, we're holding right at your here's your anchor VWAP from IPO price. We broke above it. Boom. 1, 2, 3, 4, 5, 6, 7 weeks of being above this IPO, this anchored VWAP from IPO price. We also, I'm going to get rid of that and get rid of some of these other drawings. Notice this 10MA. This 10MA, we didn't pull back down to the 10MA in a heavy displacement style move. We didn't have a heavy down move to the 10MA and then bounce off of it. This 10MA on the weekly chart came up to price. Price consolidated as your moving average came up to it. Still in a heavy uptrend. So that is something that I'm very much looking for on weekly charts a lot. And that gives the best opportunity of continuation during consolidations when you do see the moving average coming up to it instead of a sharp drop to that moving average. If there's any other questions, let me know. If not, I'm gonna go ahead and get off. We've been here about 50 minutes, 47 to be exact. And yes, and then we'll be back next week. I don't think there's a lot of news this week. Next week we'll go over Tesla earnings. I do definitely want to go over Tesla earnings. I really want to go over throughout this whole earnings season. I'm going to be going over your really important earnings. Tesla, Apple, Amazon, Google, Microsoft, Adobe, all your major tech stocks. I'm going to be going over all their earnings, kind of that insight similar to how I was doing. Does Bitcoin affect the market hella or not really? Not really anymore. It used to. It used to affect it a lot more in 2020 and 2021. But ever since the crash of 2020 and the Baito ETF came out, and now we have that other ETF coming out, it hasn't had too much of an effect. If you kind of, let's just do a QQQ, we'll get rid of all these drawings, and then we'll get rid of my moving averages, and then we'll just do a Bitcoin on that same level here. Like here we had a similar movement, but look at here. As Bitcoin's pulling back, SPY's pulling back, Bitcoin's going sideways as we're still pulling back. We have moves up together, Bitcoin consolidated as we're continuing to move higher, and now right here was kind of the tell. Right here. Bitcoin's dropped a lot and we're just pushing to the upside with Nasdaq. So back in the day, look here during these 2020, 2022. Look at this. This was very, very correlated. Let me get a line chart actually for so blue is Nasdaq, orange is Bitcoin. You do see a correlation, a very small, similar correlation right here, right there. As we're coming up, let me get a log chart on Bitcoin. Whoa, that's my face. A log chart on Bitcoin 2020. We bottomed at the exact same time. We came up at the exact same time. Bitcoin, yeah, Bitcoin even had its top pretty much at the exact same time within a couple days. but now we're kind of seeing a little decoupling, which is very interesting to see if it's going to work like that or not. And I know there's still people that are looking to long Bitcoin soon, which I have no problem with. I don't personally trade crypto. It's not, I stopped trading crypto in 2020, right around 2021, right around, actually, it was more right around these levels. I didn't even make it to the all-time highs. I cut all my shit at 50K or so. And so like I don't trade crypto. I don't even have a want to trade crypto because it just moves so crazy. It's very like you can't hardly find any exchanges anymore. So it's not my forte. Bitcoin Playboy, he's much better at it and he freaking kills it. Absolutely destroys it. But not for me. But it does have a little bit of a correlation. I see some questions coming, some people typing. While we're doing that, I'm gonna let um whoa. Do you think the decoupling is due to people pulling out of the big firms that have been buying it all up, so firms are forced to sell their Bitcoin holdings? Not necessarily. I think the decoupling is more of institutions getting into Bitcoin and just kind of buying and holding. Because you got all these institutions, Vanguard, VanEck, BlackRock, I mean, all these institutions are buying the shit out of Bitcoin because of the new ETFs. And what are they all using? What are those ETFs using? They are using Coinbase. And so there is something also that I was talking about on Sunday that this isn't guaranteed, you might see an actual decoupling between Coinbase and Bitcoin. Ooh, this looks nice. Because so many people are actually, and like institutions are actually using Coinbase as a platform. And like you're seeing now, you see very similar to a lot of the other stuff we look at, a heavy move, a lighter move. If we could pivot here and have a strong move to the upside, we're retesting. We had a heavy break right there, retesting all these highs. This could be a good move. We could see this would now become a week high. And so like I don't trade crypto, but I will trade Coinbase. And but through options because I can gauge my risk a lot easier for me. Stop right there, 7% away, looking to get 50% gain. You got about a 7 to 1 if we pivot here. And so if we pivot in Bitcoin, we're going to pivot in we're going to pivot in Coinbase and this could make a pretty good move to the upside. That's why I appreciate the variety of analysts in Playbit. People kill options, people kill crypto. Show me what I'd prefer and what I wouldn't, but still learn from both sides. Absolutely. And I watch all Playboy streams. And if you watch most of what I'm talking about in our stocks, it's very similar setups to what Playboy does and talks about in his crypto. I do a lot of the same setups except they're in stocks. And like we've been talking about with this USDT too, this finally broke out. You're above your 10 MA on the weekly. This is probably coming for this moving average here, or this imbalance here. And so yeah, we've been talking about this move for a minute. Probably coming up to I heard Mangland talk about 7%, which is right inside this inefficiency, which makes a lot of sense. When we were over here, somewhere in mid-December, we were talking, okay, this is gonna start bouncing. And then as it undercut not last week, but the first week of January, I specifically said this is the end. This is where it's gonna start moving up because you see that heavy undercut and bounce. And that's exactly what it did. All right, we're about an hour into it. I'm going to go ahead and stop the stream. And